Hello, I'm Angeline Ong, and this is your week ahead with IGTV starting 7th of April 2023. Now, first up on the calendar, Japan is out with consumer confidence figures, and then USA will be out with their wholesale inventories data. Watch out for any signs of softening there or indeed strengthening if we see a change in the trend or the mood of the markets. On Tuesday, we get the BRC retail sales monitor from the United Kingdom. Australia, which this week hit the pause button on interest rate hikes, while they've got consumer confidence numbers out of Westpac and business confidence numbers out of NAB. Turning to China, we have the consumer price data, and then to Japan on Wednesday, where we get producer price numbers as well. So good clues as to where inflation is heading in those two countries. We have an interest rate decision midweek from Canada and also from the US. Watch out for the Consumer Price Index, EIA crude oil inventories, and the FOMC minutes. On Thursday, the UK has the RICS house price balance after a surprise upbeat number from Halifax earlier today. We also have GDP numbers, those are the monthly ones, and industrial production. China releases trade balance numbers, industrial production data out of the Eurozone, and we're also waiting on producer price index data from the US, along with initial jobless claims. And then on Friday, we end with retail sales numbers from the US, along with trade data, industrial production, the consumer sentiment reading from Michigan, the business inventories data, along with the oil rig count from Baker Hughes. Joining me now is IG's Axel Rudolph. Axel, what's the key trades surrounding the FOMC?
Well, I think you can trade any US index, such as the S&P, for example, which I've chosen here, because obviously the FOMC minutes will tell us what the future interest rates decision might be with regards to the US Fed. And from a technical perspective, what's interesting with the S&P 500 chart is that we managed to rise to a near 2-month high before coming off just this week. And it'll be interesting to see whether after the FOMC minutes and also the CPI data on Wednesday, we can rise above this current April high at 4,141 on the daily financial bet, in which case we could most likely be heading back up again towards the February highs at 4,195 and continue the current ascent. If the FOMC minutes were to show that the Fed is actually more hawkish than market participants think it is, we may see a further decline short term, take us perhaps back towards the 55-day simple moving average here in orange, and also the March to April uptrend line, which come in around the 4,030 to 4,020 area. But from a technical perspective, for me at least, as long as we remain about 4,000 or so over the next coming weeks, I expect further upside to be seen.
Now, other than the FOMC, of course, we're looking out for earnings as well. Plenty on the corporate calendar. We've got Tesco on Thursday. They're out with full year earnings, and Imperial Brands also updating investors on their trading. And then on Friday, we've got the start of the US banking earnings season. JP Morgan Chase, Q1 earnings there. Wells Fargo, Citigroup, and United Health also updates investors. So, Axel, which are your top picks out of those key earnings reports?
Well, I think, as you just mentioned, Angeline, Tesco's full year's earnings could be interesting to the Tesco share price, because if you look at the daily financial bet here, what we can see is that we've had a very, very nice advance from around 195 pence back in October to currently around 267 pence in April. And to me, this chart does look quite bullish still, and with better than expected earnings, or even if earnings come in as expected, I wouldn't be surprised if we were to then challenge the high we saw back in August of last year at 271 pence. And if we were to manage to break above that, the next upside target would be the May high of 2022 at 288 pence. So further upside most likely. But if the full year earnings were to disappoint, we would really, from a technical perspective, have to fall through the March low at 244 pence before I would expect this market to top out. So it would have to be a really negative surprise for the Tesco share price to come off that much. So most likely will continue in the direction of the overall trend, and that is to the upside.
Thanks very much there, Axel Rudolph, with his technical analysis for Tesco. Tesco shares up around 18% year to date.